this video, let's talk about CSL, their latest full year results and their valuation to see if they're worth your attention right now. Then I found out that Jeff Dawn's son is the director of engineering for Novonix. So we'll talk about what that means for the company as well. And on top of that, I added 2 new positions in my portfolio. So I'll show you what I bought in this video as well. If you're new here, my name is David. I'm just
a shaved head Asian dude on the internet making videos.
So please don't use this video as financial advice. The number on the top left-hand corner of all my thumbnails reflect how much my portfolio is worth at the time of recording this video, just so that I can take you on a journey with me as I strive towards financial independence. If you appreciate that transparency and also learn something new in this video, just gently smash that like button right there and that will mean the world to me. So without further ado, let's go! As of recording this video, CSL is trading at $295 per share, with a market capitalization of $134 billion. There are 2 main parts to the business. You have CSL Behring, which contributes upwards of 90% for the entire company, and then you have Seqirus. Now, Seqirus is the vaccine business that they acquired in 2015, and CSL Behring is mostly treatments for rare and serious medical conditions. Here are a few highlights from the 2020 full year result. You have CSL Behring, the largest contributor to CSL revenue, increased by 8%, mostly driven by the immunoglobulins division right here. Full year's EBIT for CSL Behring is approximately $2.4 billion, up 11% from last year. Not to mention there was slight improvement on the gross margin as well. The challenge with this business unit is that plasma is a key ingredient in producing those products, and the pandemic has increased the cost of collecting that plasma. So there are additional cleaning efforts, masks, and also social distancing rules to keep everyone safe. Even additional marketing effort to help people navigate different restrictions to visit those plasma centers. Seqirus, one of the largest vaccine providers in the world, have grown their revenue by 11%. Now the driver has mainly been governments around the world investing heavily in this area to protect their citizens. Now, the Seqirus division in the 2020 financial year have increased their EBIT by 74%. On a separate note, CSL is in discussions with Oxford AstraZeneca to see whether if it is possible for CSL to produce the bulk of the vaccines in Australia if the trials were proven successful overseas. And with both divisions together, their net profits after tax have increased by 17%, and the growth of earnings per share have increased by 17%. Honestly, there is nothing not to like in CSL. So let's jump into the valuation to see if it's worth your attention right now. From a valuation standpoint, there's been a lot of discussion in the investing community saying that CSL is indeed overvalued. But let me show you a different perspective. I've changed everything into USD to make things a little easier for us to understand. And one of the first things that we can do to see whether CSL is indeed overvalued compared to the other competitors is to do a very simple market cap test. The market cap test is essentially taking the market capitalization divided by the earnings per year. And what we're left with is the number of years that it takes to get your money back. Now for CSL, it takes about 46 years. For Amgen, it takes about 19. And for Novo Nordisk, it takes about 23. And for Takeda, it takes about 53. So as you can imagine, for Takeda and CSL, they take a long time to get your money back. So we can understand where the sentiment is coming from when it comes to being too richly valued. But let's move on to their income statement and balance sheet just to see what else is under the hood. Now with CSL's gross margins, it's nothing pretty compared to the other 3. But I do want to remind you that Amgen and Novo Nordisk, they are significantly bigger companies. So that means that CSL have a lot of room to improve when it comes to their gross margins. At the same time, operating margins and net profit margins, they're rock solid, so I don't really have a lot of comments for that. Now, one of the more important things when it comes to comparing CSL to its competitors is to look at the R&D spend. Now, sometimes spending more money on R&D doesn't mean that they're spending that money more efficiently. So let me show you what I mean by that. So if we take a look at R&D percentage of revenue, CSL actually have one of the lower percentage spend compared to its competitors. But just because you're spending more money doesn't mean that you're spending that money efficiently. So if we take a look at Takeda, Takeda is spending almost 15% of their revenue in R&D, and it's almost 5 times what CSL is spending in R&D. but their return on invested capital is only 2% compared to CSL's 21%. So just because you're spending more money doesn't necessarily mean that you're spending that money more efficiently. And if we take a look at valuation metrics like PE ratio, this is really where the story takes a turn for me. The 5-year average PE for CSL is approximately 36, 25 for Amgen, 21 for Novo Nordisk, and 15 for Takeda. And if we overlay that with the current PE ratio for each of these companies, the only company trading at a discount is Amgen, which is about a 22% discount from its 5-year average PE. But the problem with PE ratio is that it doesn't take into account the balance sheet. So we need to contextualize these numbers with the balance sheet. Now, for CSL, the current ratio is about 3.01, which means that for every $1 worth of current liabilities, there is $3 worth of current assets, which means they should have no problem in the short term weathering the storm. And they also have very little debt. Now, on the other hand, for Amgen, they have a 22% discount compared to its 5-year average PE, but their debt to equity ratio is very high, which means that they have a lot of debt, even though the current ratio is relatively strong. Now, my main problem with looking at PE ratios as a valuation metric is that for companies like CSL, we're completely ignoring their R&D spend in the earnings part. This was expensed in the income statement for CSL, which means that it affects the E part of the PE ratio, artificially inflating this number to make it look exorbitantly high. If we adjust the earnings part by adding this number back, just to do some very simple mathematics to reflect that there is actually a return on that research and development, we can see here that the current PE ratio by adjusting for that R&D spend is about 31. So it doesn't look as bad anymore. And if we compare that to the 5-year average PE, it's actually trading at a discount for CSL. And at the same time, all the other metrics doesn't look as bad anymore as well. So if we take a look at market cap test, it takes about 32 years to get our money back now instead of taking about 45, 46. Yes, I know this method is flawed, but I do want to show you a different perspective. On top of that, the growth plan for CSL is in the R&D pipelines, not to mention they might be involved in producing the bulk of our vaccines here in Australia. So yes, I do think CSL is 100% worth your attention. Now, personally, I'm not confident enough in my CSL story to have a dedicated position in them, but I do own them in Argo investments, and I do plan to continuously dollar average my way in. Now, if for whatever reason that the price pull back in the future and the growth trajectory and the story of the CSL haven't changed, then yes, I might consider having a dedicated position in them. So just a bit of market news before we wrap up the video with a portfolio update. So as it turns out, that Jackson Dawn is actually Jeff Dawn's son, and he recently got promoted to become the Director of Engineering for Novonix. Now, if you don't know who Jeff Dawn is the exclusive battery research partner for Tesla. And what I want to highlight here is that Novonix have top-notch battery engineers and researchers working for them, which will in turn to help them attract even better talent. Now, regardless of whether Novonix will have a partnership with Tesla, it doesn't really matter. They have a great business model, they have great talent, and that's all it really takes. Now, before I jump into a portfolio update, I just wanted to let you know that I have started a Patreon page. And if you found my videos to be helpful and you want to see all of my research documents and also my thesis in new stocks, I always update it first in my private Discord server. And I also do some exclusive Q&As with everyone inside as well. So consider supporting this channel via Patreon. So over the week, I bought 2 new stocks. I bought Talga, which is a graphite mining company that's listed here in Australia, and majority of the operations are actually in Europe. And Volpara Solution, which is a software as a service company based in New Zealand, using machine learning algorithm to help with early detection with ladybird cancer. Now, the foundation to both of these stories were built on these 2 videos. So if you're interested in knowing exactly why I am very excited about both of these companies, I'll leave a link to these 2 videos in the description box below. Currently, this is a joint investment effort with my girlfriend, so therefore only half of it belongs to me. And I'm using Self-Wealth for the first time just to test it out, just to see whether I like Self-Wealth compared to CMC. And I will report back on that in the next couple of weeks after I get more used to Self-Wealth. So with the CMC markets portfolio side of things, it's worth approximately $54,500 as of recording this video. I have been thinking that moving forward into the future, I want to add a little bit more back into VTS and just into index funds to balance out my portfolio a little bit more. And I'll keep you posted in terms of what I am planning to do on that front. For my stake portfolio, it's worth approximately 11,000 US dollars, including some of the spare cash sitting over here. And 11,000 US dollars, it's about 15,000 Australian dollars, give or take. And I haven't been doing a lot of buying over here just because I'm waiting for my deposit to come through to stake. Also, if you're wondering, I'm not sponsored by stake. I just use stake because the fees are a lot more affordable compared to CMC markets or some of the other places where they charge you a brokerage fee and a foreign exchange fee. But with stake, you're only paying a foreign exchange fee when you deposit the money. So honestly, a lot more affordable and a lot more easy to use. And GoPro and Nike are not stocks that are part of my portfolio. It's actually stocks that's given to me for free. On that note, if you wouldn't mind getting a GoPro, Dropbox, or Nike when you try stake for yourself, I'll leave a link in the description box below. Before I wrap up the portfolio update, I just wanted to show you what's on my US stock watch list. I think TSM is very strong. EA and Blizzard is also on my watch list because I'm a gamer myself, and I think that moving forward into the future, esports are going to be massive. So I'm very, very keen for that. And a few more that I'm interested in is Atlassian, streaming, which is Disney and Netflix, more towards Disney to be honest, and also Google. But I'll talk more extensively about my thesis on each of them in my Discord server. So thank you for watching this video all the way to the end. If you found this video to be helpful, just gently smash that like button right there. Subscribe to my channel, click onto the bell so that when I release more videos like these in the future, you'll be the first one to know. Until next time, my name is David. Otto will always do the honors and see you very, very soon.